Welcome to the course, Basic Financial Analysis, Ratios, and Portfolio Monitoring in Microfinance Banks. What this course covers: financial statement and credit analysis, statement of financial position, balance sheet, income statement, profit and loss, cash flow statement, samples and exercise. The module will cover the following issues. Learning objectives. The objectives of the topics in this course are to understand the importance of accounting in microfinance. Operations. To acquire knowledge required for microfinance application. To understand and be able to prepare the financial records from the beginning. To understand the components of the various financial statements. Learning outcomes. Good financial analysis is the basis for sustainable and successful microfinance operations, not forgetting that information depends solely on the quality of data recorded for analysis. This course will help staff and managers of MFBs/MFIs understand and apply appropriate financial statements in order to ensure quality financial analysis and reports. Table of contents: 3 parts, 9 lectures, 2 assignments, 1 final quiz. Course outline breakdown: Part 1, which has Lecture 1, Lecture 2, Part 2, which has Lecture 3, Lecture 4, Lecture 5, Lecture 6, Part 3, which has Lecture 7, Lecture 8, Lecture 9. Now to critically look at the contents in what we will be studying. We have Part 1, which will cover understanding financial analysis and credit analysis. Lecture 1, which will cover what is financial analysis. Breakdown of financial analysis and credit analysis. What is credit analysis? Credit analysis process. Financial accounting overview. Understanding MFI financials, financial statements and operational reports. Then, Lecture 2 will cover credit analysis, capacity to pay, willingness to pay, investment plan, collateral, risks analysis, review question. Part 2 will cover understanding position, balance sheet, basic information needed for statement of financial position, balance sheet, analyzing statement of financial position, balance sheet, components of statement of financial position, balance sheet, types of statement of financial position, balance sheet, statement of financial position, balance sheet, items, sample statement of financial position, balance sheet. Lecture 4, Income Statement, Profit and Loss. What is the income statement, profit and loss? PL account items contained in the income statement, profit and loss. Items contained in the income statement, profit and loss, components of the income statement. Profit and loss, the income statement, profit and loss, breakdown, calculating sales in the income statement, profit and loss, calculating cost of goods sold in the income statement, profit and loss, calculating gross margin in the income statement, profit and loss, operational expenses, other income, disposable income, repayment capacity. Lecture 5, Ratio Analysis for Clients. Why do we need ratio analysis? Ratio analysis table, sample ratio analysis table. Lecture 6, Cash flow statement. What is cash flow statement? Cash flow statement components, importance of cash flow statement, cash flow template. Complete this exercise. Part 3 will cover understanding microfinance institutions' financial statements. Lecture 7, Financial Statement for MFI, drafting financial statements, statement of financial position, balance sheet, components of statement of financial position, balance sheet, assets, assets items, liability, liability items, equity, equity items, statement of financial position, balance sheet, template, sample statement of financial position, balance sheet, depreciation, depreciation sample. Lecture 8, MFI income statement, profit and loss, income statement components, income, expenses, income statements, profit and loss, items. Sample income statements, profit and loss, sample comparative income statements, comparative profit and loss. Lecture 9, Cash flow statement, importance cash flow statement components, cash flow items, cash flow methods. Are you ready? Let's get started with the main course. Part 1, What is financial analysis? Financial analysis in 5 simple definitions. Financial analysis involves computation of analytical ratios derived from financial statements and the interpretation of these ratios to determine the basis for management decision. International best practice asserts that accurate financial analysis is the basis for maintaining a sustainable microfinance operations. Financial analysis is undertaken in order to determine if a project is a good investment for a proposed plan. Understanding the analysis would determine the liquidity, solvency, or profitability of the business. Danti and Muscula, 2013, page 10, says financial analysis is the process of identifying the financial strength and weaknesses of the firm by properly establishing relationship between items of financial statements. Analyzing the financial analysis of a business has a lot to do with examining the balance sheet, income statement, and cash flow and other applicable reports. Breakdown of financial analysis and credit assessment. Financial analysis. Financial analysis helps in evaluating economic trends and indices, used to set organizations' financial policy, shows how funds have been effectively invested in the business. It is used to build long-term plans. It is used to identify and compare projects through use of numbers and data. It explains the difference between the historical performance of a business. Credit assessment. Creditworthiness is considered as a criteria for granting loan to a customer. Conclusions are drawn from available data regarding the creditworthiness of the client. Assessment is concerned with the evaluation, identification, and mitigation of risks associated with loan granting. Clients are assessed based on information provided. Clients' repayment capacity is the subject matter of assessment. What is credit assessment? Credit assessment in 5 simple definitions. Credit assessment involves analyzing and determining the credit status of a client's loan request and making a concise decision based on his credit history and present assessment. Credit assessment result shows the ability of the client to repay the proposed loan or not. No loan should be granted until proper credit assessment has been carried out. In other words, credit assessment is the basis for granting loan. Lender institutions grant loans based on the confidence and creditworthiness of their client report. Creditworthiness encompasses the client's willingness and ability to meet his obligation to pay as when due. Quality credit assessment relies on information gotten from the client's cash flow statement, balance sheet, inventory turnover rate, general performance, and market conditions. In order to establish relevance for any credit assessment process, it is good for the client to have a viable business plan with good credit history. The client through his business should be able to show that it can meet up with the lender's repayment structure. Normally, credit analyst evaluating client business for credit approval usually likes to see up-to-date business records and good history of prompt payment before making decision about the loan. Credit assessment processes. This should include the following. Credit assessment processes should include the following: assessment of client's current and expected future income with correspondent disposable income, assessment of client's current and future expected debt obligation or debt structure if any, assessment of client's household spending pattern and payment behavior, assessment of client business position and that of the guarantor, assess credit history, red flags, overdraft or arrears, relationship with external customer, etc. Financial accounting overview. Microfinance institutions, MFIs, rely on good accounting information system as this is the cornerstone to continued existence of the institution. Financial reports do not only end when transactions are completed, it helps managers prepare budgets, determine future projections and analyze previous reports in order to make amends and also prepare for future outcomes. Every MFI manager must know how to interpret these sets of financial information which form the basis of the accounting system in which they work with. Microfinance professionals need to understand that accounting process entails recording of financial transactions, grouping them into various categories, and summarizing the results generated over a period. Understand MFI financials. In order to understand MFI financial statements, we need to understand the 3 broad areas to concentrate on. These areas are the financial statements, statement of financial position, the income and expense statement, cash flow statements, portfolio reports and operational reports, financial statements and operational reports. The usefulness of financial statements and operational reports enhances high performance and financial integrity for the MFI. The statements are assessed by a set of professionals and institutions which have various interests in the operation of the MFIs. The users of this information includes but limited to the regulatory authorities, Board of Directors, MFI staff, donors, investors, rating companies. We have come to the end of Lecture 1. See you in the next lesson.